Good afternoon, everybody. Today is Friday. It's the 11th of October, 2013, and this is Brian Shannon speaking from alphatrends.net. We have the market closed here for the week, so let's take a look at the numbers. The S&P 500 this week closed with a gain of 0.81%. NASDAQ was down slightly. The semiconductors up 0.3%. Russell 2000, all these markets really recovered very nicely, except for, of course, you see gold down a lot, and as well as oil. But let's take a look at these charts and make some sense of it. This week we saw that this longer-term trend line from the lows about a year ago was broken, and as I had mentioned in here, that breaking a trend line doesn't mean we have a reversal. It means that we have a slowdown in the rate of ascent. That's all it means. It tells us definitely that we want to be a little bit more on alert, but you certainly don't want to be selling short as it breaks that type of trend line, especially after you have to realize where has the market come from. I'm always saying, two questions you have to ask yourself before taking any trade. Where has the market come from? Number one, this market just dropped from 173.5 down to 166.5. So to short it after a 7-point decline doesn't seem to make sense. It seems like the market's due for more of a bounce typically than that. And where does it have the potential to go before it's likely to encounter some support? And in this case, perhaps it was down towards about that the lows that we saw back in August. But the fact is the market turned around. We were, prior to Thursday, of course, still in a very cautious environment over the intermediate term, below this trend line and below the declining 5-day moving average. On Thursday, we gapped up above it and took off from there. And today, we obviously added to those gains. So this is the volume-weighted average price since that gap higher. Here's the volume-weighted average price for Friday. So we were above the volume-weighted average price pretty much all day today. And when we look at the daily time frame in here, we have to look at it and say, here's where we've seen in the past a prior important level. That is, we've seen a little bit of resistance in here, and then that failed to hold as support. So right now at about 170 and a quarter up to 171.10 or so is possibly an area where we're going to find some resistance for this market. But the fact is, we can't sell short because we think we're at a potential level of resistance. We have to sell short only when the market turns lower and we're below key declining moving averages. Right now, the path of least resistance is higher. You can say that it's overbought in the near term, and maybe there's some risk out of Washington still, but the risk is being discounted by the market, at least for now, until we have more information. So ideally for next week, what we'd like to see would be some kind of pullback down towards maybe 168.5, even 168, and then to be able to build a little bit better, higher low in this area, and maybe test this prior little resistance, this band in here. So maybe 168.5 to 169. A pullback down to there would create a higher low. We'd have that rising 5-day moving average come up to meet it, and then I think from there we could probably continue to move higher as this market seems to still want to go higher. We of course have to manage risk on each and every stock that we trade based on its own merits, not on what we believe theoretical relationships should be. The NASDAQ came down and punctured through that advancing 50-day moving average and then snapped back here this week. So we saw that the important level of prior support, 78.50 down to 78 and a quarter, was broken here, and that put us very defensive. The market gapped up and was able to push through there and hold above it today. That is on Friday. So now I think if we got a pullback down towards 78 and a quarter to 78 and a half next week, that wouldn't be a reason for concern. That would be a nice higher low in here before this market has the ability to maybe push to new highs here again. The Russell 2000 is very close to all-time highs. We've only still closed above this level once, and that was 2 weeks ago. So we had this market, the Russell, break down through this prior support band, 106 to 106.5, and that support we were treating as guilty till proven innocent until we got back above it. Now next week, maybe we continue to just break out through 108 onto further higher highs, that is all-time highs, I think a better scenario, the market doesn't care what I think, but I think a better scenario would be a pullback down to 106, 106 and a half to build a higher low here and then create a little bit more energy to break out from. The semiconductors, they broke some support here this week, but recovered very quickly back up through there. So this 40 to down to about 39.75 had been the prior support. We broke that and then gapped up above it and acted like it didn't even matter in here. It didn't even register really, because we are close to the highs. In fact, on a closing basis, I think we did close at a new high for the year here in these semiconductors. And let me just confirm or deny that by taking a look at this high right here. You can see in the bottom left corner that close was 40.49. Today we tied it, so we closed at $40.49. That was the high close right over here on September 18th as well. So these semiconductors remain in a strong uptrend. They were super resilient as the rest of the market pulled back. We had only seen not even a 38.2% retracement off of the prior low in August that we got down pretty much right to that 38.2% retracement, whereas the financials were the weaker group. They came back a lot more. And I've been talking about the potential of resistance at 20, in this area, 2020 to 2030, and we're not showing any resistance here yet. Someone is asking me today in the chat room, do I think that this is resistance? And I said, we have no way of knowing what resistance is until after the fact. We have a potential level, an area where we've seen resistance in the past, and this could act as resistance. But until the market backs away from there and we're back below declining moving averages, I think it's it doesn't make any sense to sell it short. Now you look at the daily time frame here, and this daily time frame has just been a giant mess in the the financials. What I did point out Wednesday evening in a video was that we had a pretty obvious head and shoulders pattern, and that it broke the neckline of this pattern on Tuesday. What I had said that evening was that, a lot of times, most of the times when you have a very heavily advertised pattern like we have here in the financials, that the breakdown usually does not continue. It's too obvious. So here we saw, the same thing. We saw the market had already declined more than a point here, about 5%, to get to that level, and then it trapped shorts in here, and now we're moving back higher again. It's no different than all the tweets you saw a couple weeks ago on JP Morgan and its head and shoulders pattern. Right here on this day, the number of tweets I saw pointing out this head and shoulders pattern was most I've seen for any head and shoulders pattern ever. And here we are, we bounced strong from there, pulled back, and now we're back up again. So these patterns are good to recognize, technical analysis 101, but the only thing that pays us is price, and they're a good reference point. There's something to kind of give us a little bit of order to what we're looking at, but it has to make sense within all time frames if we're going to engage and we're going to commit our money. Why would you wait for a break right down here to get short when we had already been in a downtrend below that declining 5-day moving average? And I'm not suggesting that I was short, because I certainly wasn't. I've been saying pretty much avoid these financials, but they continue to be a big mess here, and I don't see any advantage to trading them. Some of the trades that we did get involved in this week on Alpha Trends included Apple. Apple is really starting to have a good look to it. It is, of course, above this these longer term moving averages, and we saw, I don't know, what is it, 3-4 weeks ago, the so-called golden cross, which I don't put a lot of weight in. It's just another technical thing. But we see that, looking at the weekly time frame, that this prior resistance has held strong as support, and we're in a tightening band that looks like the market should be able to get muster some further energy to break out. Now today we did break out above the high for the week of 492.65 was the prior high for the week, and it looks like the buyers are in control, rising 10, 20, and 50-day moving average. We've got these higher lows in here on Apple and today's higher low right around this 486 level, that I would think, so today's low was 485.16 actually, but I think breaking back below here would nullify what's looking like an emerging move higher here for Apple now that we're above this and we have the higher low. I think that, you know, Apple's probably headed north of 510 or so here in the next couple weeks, so that's still a good one to keep an eye on. We had, let's talk about gold for a minute, because 2 weeks ago I had mentioned and said, listen, it's still in a downtrend. It's still in this primary downtrend, and it wouldn't be surprising to see it come back down towards this 113 level, and I still think that that's the case. It's in a primary downtrend. You're going to get bounces in any downtrend, but it takes time. If they don't scare you out, they'll typically wear you out, and a test of those lows is not unreasonable to expect. It's very similar to, you know, the decline in Apple and how everyone was calling it a buy over here, and every single time it made a lower low. The fact is that gold is in a downtrend, and it's likely to continue for a while. The stocks that we were looking at this week, this was actually an interesting one. It was shares of NetEase. We got involved in this stock on the long side right here on this day, and I believe it was $72.70, and it ran up quickly. We sold a little bit at a profit, and then it came down and took us out on the rest at a loss on the rest. So the balance, it was a loss, but overall, look at the mess that we avoided, because what we're looking for is a pattern of higher highs and higher lows. When we get our higher high here on the intermediate term time frame, at this point, that's where we want to purchase. And our plan is, as long as, you know, we have, this is what looks like it should be an emerging pattern of higher highs and higher lows on the intermediate term time frame, which would put it in alignment with what we have on the longer term time frame. So if we get involved here and buy this strength, we want to protect ourselves and then raise our stops underneath the higher lows. The initial protective stop, though, saved us from a much bigger loss and an emotional experience, because the stock dropped, you know, another 7 points or 10% after we got out. So it's not always about making money is a successful trade. This one was basically break even with the profits that we took, but it was a great trade because we didn't get stuck in here. A trade that we didn't take this week was BALT. We were looking to buy it above this little level of resistance here at $5.40 or $5.39, I think it was. Anyways, we didn't purchase it. We were waiting for it to get above that level, and then we were going to put our stop down under here. Instead, the stock never gave us a reason to purchase it. We did get involved in Abercrombie and Fitch on the short side right over here at 35.19 or so, and that was on this day, and covered I think the balance of it on this day right here. Shares of Biogen IDEC we had shorted right over in this area and covered the balance at 225. We took some off at 233 I think, and 225 was the balance yesterday. Ben was another one that we got involved in on this particular day right here. Ben Franklin Resources, whatever that is, and we took half of our position off up here, and we got stopped out of the balance over here, so we didn't have to ride it down 2 points. And you know, everyone wants to be a swing trader, they say, but then when stocks start moving against them when they get the entry, then they panic. But you have to have a strategy that allows you to be in the stock from a position of strength from the beginning. So that initial protective stop is super important. One area where we saw a lot of damage this week was the biotechs. Now the biotechs broke an important near-term support level, and this group has been super strong. So it was met with some emotional selling that brought it down. And here you can see we tested the 50, then we tested the 100. We tested the 50, then we tested the 100-day moving average, and we're getting a bounce. But the biotechs are damaged, and I think that, you know, I talk a lot about the biotechs and how risky they are, and particularly the little ones. And this week was a great lesson for that. That especially when these biotechs break down hard, the more speculative ones, that you don't want to go in there and purchase them at what you think is a discounted price. You know, dropping from 29 down to 20, that's 30% breakdown in shares of Acadia. You can look at ARIA, and this was an absolute disaster here, REF Biopharmaceuticals. It looked like maybe it was breaking over here for people who still held on to it because they believed in the science or whatever. They got their clocks creamed this week. Arena Pharmaceuticals has been in a constant downtrend here for the last 6 weeks. ARRY, and this is just the A's. This one looked like it was breaking maybe a couple weeks ago, and if you had held on and not had an initial, let's look at this and say, had you purchased this stock, the appropriate place to purchase it would have been where? Well, the appropriate place would have been at this point right here as it made the higher high. And then what? Our worst case stop would have been under this level right here. Now, it sucks to see it get stopped out and then do this, but at least you're out when it does that. If maybe you would have even purchased it back here and then raise your stop to this point. The fact is, you have to manage your stocks. You can't just look at your initial protective stop and think that the game's over. You cannot let these biotechs in particular get the best of you. CLDX has been in a monster uptrend for a while here, but when you look at it on a monthly chart, it's nothing unusual. Look at the personalities of the stocks that you're trading. A stock like this CLDX has a habit of running up and then pulling back very deep. So it's not unusual for biotechs to do this, and I just wanted to point that out. Not that I didn't get burned in any of these, but don't get burned in them. Be very careful with those little biotech stocks. By the way, this week we started seeing earnings come out a little bit, and this is really the peak of earnings season here over the next couple weeks, and I wanted to encourage you to take a look at whispernumbers.com. I was talking to their owner over there, and he's a good guy. He does a lot of good work with earnings reports, so take a look at that, and hope everybody enjoys their weekend. I will talk to you next week. Thank you.